Welcome back to Bazaar Morning Call. We'll expect a gap-up opening today after a strong rebound that we've seen in the Asian markets, and that green is really coming as a big relief given the kind of, setback that we saw yesterday. But our research team is standing by with a list of top 10 stocks for the day. ONGC is the first one on our list. Let's find out why you should be tracking that one. Sonal, good morning.
Good morning, Sonia. Well, ONGC reported numbers which were better than estimates. Margins were higher largely because of lower operating expenditure. The profits lower than estimates. That is largely because of lower other income on a quarter-on-quarter basis, higher depreciation and higher tax rate as well. But if you look at the numbers on a quarter-on-quarter basis, revenues were up 2%, EBITDA increased by 6.8%, margins came in at 52.7% versus 50.2%. Profits were down 9.4% for the reasons that I mentioned earlier. But these are better than what the street was working with. Crude production and gas production, both of them have declined 2% on a sequential basis, slightly better than street estimates. The conference call is at 3:30 p.m. today. We'll get more idea about discoveries and also the production from KG Basin. Jeffrey says the numbers were better than what they had estimated. They have a buy with a target price of 390. Crude also has recovered a bit, so expect some green on this stock today.
Okay, thanks a lot for that, Sonal. Well, let's hop across to Rima, who's here to tell us about Bharti Twins, who had reported their numbers. Morning, Rima.
Hi, good morning. So let me start with Bharti Airtel, where, some would say it's in line. Some are saying it's a slight miss on the margins. So the company has reported a consolidated revenue growth of 2.4% in line with expectations, but margins at 51.8% fall short by about 30 basis points. Again, not too much of a miss, and the miss has come in on the enterprise business. The India mobile business has reported a revenue growth of 2.1% ahead of what its peer Reliance Jio has reported. Margins have expanded by 50 basis points. The ARPU growth is modest. From 209, it's become 211. But remember, the big ARPU jump is only going to come in Q2 once the tariff hike takes effect. Subscriber net adds too at 2.2 million. So on the whole, it's not a very exciting quarter. But, considering that, the whole market is going to be in the green, I'm going to go with green for Bharti Airtel because there's nothing so bad in the numbers, for it to, come under severe pressure. Profits, though, have jumped up by more than 100%, boosted by an exceptional gain. Here, the conference call is at 2:30 p.m. Bharti Hexacom is again slightly lower than street expectations. Revenue growth of 3.7%. Margins have declined by 120 basis points quarter on quarter. Profits, if you adjust for the exceptional gain, are down 13% on a quarter-on-quarter basis. And this is a stock which has outperformed its run-up since its IPO earlier this year. So, it's slightly lower than expectations. Back to you.
All right. Thanks very much, Rima, for that. So that's Bharti and Hexacom in focus today. But more numbers. Tata Chemicals, Deepak, Nitrite. Sonal is here with details. Sonal, good morning.
Good morning, Prashant. Well, for Tata Chemicals, it was a big decline on a YY basis. If we look at the EBITDA, that was lower. Operating profit margins at 15.1% versus 24.7%. Profits were also down by 67%. But what was the positive? The positive is that margins have recovered on a quarter-on-quarter basis. They have come in at 15% versus 13%. And in their commentary as well, the company says that their India business demand was quite stable across all end-use industries. In America, demand was flat. In Europe, they experienced muted demand. But they were facing a big competition coming in from Turkey in terms of dumping at lower prices. That they think is going to end soon because of global problems and freight cost issues as well. So that is a positive there. For Deepak Nitrite, it was a good set. On a YOY basis, the revenues increased 22%, EBITDA 47%, margins improved around 300 basis points, leading to a profit increase of 35%. This was led by the phenolics division. So while the advanced intermediates saw an EBIT decline of 42%, phenolics saw an increase of 137%, and that is the reason we saw that beat on numbers today.
Okay, thanks a lot for that. Well, Vamakshi is also joining in to talk about Schneider Electric, BEML, Triveni Turbine. She has her hands full this morning. Vamakshi, good morning.
Well, good morning, Sonia. Let me first start off with Schneider. The company reported a good set of numbers. Revenue was up nearly 20%, and this was largely being driven by strong sales growth as well as better mix of transactional and services segment. EBITDA margin too saw an uptick of almost 380 basis points to 13.8%, driven by a better product mix, order pricing and operational efficiency. Resultantly, the net profit surged by almost 40% on a YOY basis. The order inflow too was healthy, up nearly 19%, coming in at 531 crores with good momentum seen across ordering activity across all the segments. The order backlog resultantly came in nearly 16% higher. BEML on the other hand reported a weak set of numbers. Revenue grew by almost 10%, but this is much lower as compared to what the company had guided for. They had guided for 20 to 25% growth in the top line for FY25. EBITDA loss of 50 crores is what the company has reported, the same as the same quarter last year, and they've also reported a net loss of 70 crores. Order book saw an uptick of almost 21%, of which nearly 3,400 worth of orders are executable in the current year. So overall, a weak set coming in for BEML. But lastly, let's focus on Triveni Turbine. It's a strong set, beat across the board. The company has reported the highest ever quarterly revenue, EBITDA and order booking. Revenue saw an uptick of 23%, largely being led by the domestic business mix. EBITDA margin came in nearly 180 basis points higher. It came in higher than estimates as well. Net profit saw an uptick of 32%. They've also managed to report the highest ever quarterly order booking of 636 crores, and this is largely being driven by exports, but domestic order booking was rather muted on account of the elections. But overall, good set for Triveni Turbine as well.
Thanks a lot for that, Vamakshi. Well, let's wind this down then with Sudarshan, who's here to tell us about a few more stocks that he's tracking. Sudarshan, take it away.
Morning, Nigel. So we'll start with V-Mart Retail. On the bottom line, company has reported profit against loss in the same quarter last year. Profit has come in at rupees 12 crore versus loss of rupees 22 crore. Revenue was up 16% and margin has expanded by 500 bips year on year. Even internals are looking strong. Same store sales and same store volume both were up 11% each. Footfall has risen 36% and sales per square feet per month was up 13% year on year. And for Lime Road business, losses have seen a sharp reduction. On year-on-year basis, losses have reduced by 60%, and on a sequential basis, it has come down by 15%. For Aarti Pharma, I'm going with green just because of healthy revenue growth. Revenue has increased by 21% year on year, but margin was lower both year on year and sequentially. EBITDA was up 14% and profit has increased 18%. Guidance for FY25 company has maintained it. It expects EBITDA growth of approximately 10 to 12% and it aims to achieve long-term goal of about 15% annual growth in the next 3 years. So I'm going with green for both V-Mart Retail and Aarti Pharma.
Okay, V-Mart Retail and Aarti Pharma. Thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: ONGC, Bharti Airtel, Tata Chemicals, Deepak Nitrite, Schneider Electric, Triveni Turbine, V-Mart Retail and Aarti Pharma, while stocks with negative news flow is Bharti Hexacom and BEML. The good part though is that crude prices have fallen and that's always good for a market like ours. So Manisha Gupta is joining in to tell us the latest in the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, the commodity has seen a pause after the sell-off that we saw in the markets yesterday. The crude oil prices did hit a 7-month lows, but we've seen nearly a percentage point of gain come in for the Asian markets right now. Well, there are concerns about weak oil demand. The geopolitical tensions in Middle East, though, also add to uncertainty. The area that has continued to decline and has extended further decline today is the metal prices. Poor demand, rising inventories, weak economic data, sell-off in other asset classes, recession concerns in US, almost everything seems to be weighing onto this space. So from its highs in this year, most of the metal prices now are down by 15 to 25% on the lower side. Markets will, of course, watch out on how the stability comes back in the global market. But until then, there is really no reason to buy into metals. Further declines almost by 0.5 to 1.5% down across sector.
All right, Manager, thank you very much for that. I mean, Chinese data, terrible. We look at the PMI numbers, big contraction there, no rebound. And China, of course, the margin is the big incremental buyer still across all commodities pretty much. We take a break. Amnish Agarwal at Prabhudas later there is going to be joining in with more fundamental stock analysis. Stay tuned for that.